In this video, guys, I want to talk about ignoring common market statistics and getting frustrated by it. Stay tuned. Hey guys, a bit of an odd title, appreciate this one, but ignoring common market stats and being frustrated by it. The reason I'm doing this video now is literally trading the markets today, and it was an interesting day because it was a long weekend. There was a day off. It was Labor Day. Actually, it doesn't matter when you're watching this, but this is kind of relevant whatever you're trading. And we went into the markets. The markets were kind of gapping down and moved up a bit, moved down a bit. There's some opportunity there actually at the open, but I was very mindful that I'd personally been away from the screen for a while. It was my kind of over August period, and also had the Labor Day thing. I didn't want to dive into anything. And so I stayed out for the first 30 minutes. You wanted to watch, just wanted to watch and kind of look at it and maybe make kind of calls on my minor predictions and note down some stuff, note down the things that I normally note down, which are the ranges and this kind of bits and pieces. But in the first 30 minutes, we know that the likelihood is we will see probably the high or low or both of the day. That's just the market stats, guys. We know that generally speaking, there's a high or low made in the day, in the opening 30 minutes, 15 minutes, hour, that kind of time frame. So the opening period is normally extremes. And so there's normally opportunity for you as a trader to kind of fade a move at the open for a move drive to lows, or to kind of fade a double bottom or something, or have some kind of structure and idea of how you want the day to play out. Let's say you're looking for a kind of low to high day move, and you're kind of waiting for maybe that flush at the open that runs out of puff, has another retest, and you go long there, looking for that window of opportunity. So that's fine, and you kind of recognize this. But if you're kind of in one side saying, well, I want to be cautious, I want to make sure I'm back in tune with it, that's one thing. Then the other side, you're saying, well, that might not be the opportunity for the day. And actually what happened in this specific example, we had this kind of move, drive lower, and then the market just kind of sat in this range. And you find yourself, after you've perhaps made a few mental calls or jotted down some stuff, if you've said I'm not trading, I just want to see what's going on, and you've been correct, you think, well, actually, yeah, I was right, I was spot on with that, a couple of nice trades I would have had. You've got to be careful, because in your mind you're thinking, oh, I'm a bit frustrated, and take those trades, whereas you said, well, you're good that I'm disciplined, I didn't take them because you decided not to take them. But here's where it gets interesting, the kind of a title of this video, ignoring the common stats, because from this point on, especially if the market conditions time to do like this, kind of rotating around a VWAP or a midpoint, that that's pretty much done until the afternoon session. You know that there's no trade opportunity there so much. You're going to wait till the afternoon and see if we get a breakout of the range or something more interesting happens, or the last hour or whatever, splitting the day up into a kind of segments, something I'll talk about. I think I've uploaded a video on that, might be uploaded already, if not it's coming soon, so make sure you're subscribed. Definitely talk about it, something that we have to wait for the next phase of the market intraday. But then being frustrated that actually I want to force a trade, I wanted to make a trade, but then still being faced with the stats, which are, listen, the stats are that we're likely to make the high or the low, or in this case both, in the day. So face that fact. You decided not to trade that morning because you wanted to make sure you're in tune, you wanted to make sure that you weren't throwing money away and starting off on the wrong foot and all this kind of stuff, and from a psychological perspective. But operationally, you recognize that if you didn't trade in that first hour, then that might be an opportunity you get. If it's a quiet day, that might be it. And so accepting the fact that there's two sides to this game is more than that. But if you're thinking about from this perspective, you've got the operational side of, hey, well, the stats show me I'm going to get high or low and an opportunity to trade in the opening hour. But then kind of discipline side of it and psychological side says I don't want to trade in the first hour because I want to make sure that I'm back in tune with the markets, having been away, whether it's just for Labor Day, whether it's for a longer period of time. So you've got this internal battle, and then afterwards you're patting yourself on the back for being disciplined, as you should. If you say something, you should stick to it in trading. That's always been a mantra of mine. It's like, if it's wrong, the fact that you stuck to it is something that builds that discipline, that confidence. But then when you're coming to this zone and you're looking for a trade, you're like, well, you can't be looking for a trade because we've had the opportunity, and you have to kind of reinforce the behavior of you did the right thing. Yes, you may have called, if you like, and written down some themes and ideas when it was touching the lows and highs, etc., of a fade, but that's irrelevant. What's relevant is that you stuck to your guns, you stuck to your discipline, and You ignored the stats because more important than any operational statistics, guys, as in it's making a high or low in the first hour, 50 minutes, 30 minutes, whatever it may be for your market, is you controlling your emotions. You controlling, that's the wrong thing, not controlling emotions, you recognizing emotions and you being disciplined and sticking to your plan. If you say you're not going to trade in the first hour because you want to get a feel for it, once you've made that statement, don't go back on it. It would have been far worse longer term for me and for you and for any trader to say to themselves, I'm not going to trade in this first hour, and then to take a trade that faded that low, it was a nice low fade or a high fade, whatever it may be, take some money out of the market and feel smug about it, because all you're doing is reinforcing the fact that if you break your rules, you will be rewarded for it. So subconsciously, you're getting a little pat on the back for going against what you said. It's far, far better, although it may not feel like it at the time when you're in this zone. It's like frustrating. There's no opportunity. The opportunity was there. I missed it. I said I wasn't going to trade it. It's far, far better longer term to say, you know what? Stuck to your rules. There was opportunity there. You didn't trade it. You didn't get involved in it just like you said you wouldn't. That will serve you way longer term just from ignoring the common market stats but sticking to your guns and trading plan than it will diving into trades and breaking rules. All right, guys. Hope you're having a good time trading. I hope you're managing the risk. And if you like this kind of stuff, let me know. Comment section below. Like it, subscribe, all that kind of stuff that we talk about on the channel. Loads, and you guys probably hear me go on about it. Loads and loads and loads, but I do appreciate it if you are a subscriber and if you do comment and share and like and all that kind of stuff. And if you're new here, this is stuff we talk about, strategies, mindset, all stuff to make us better traders, regardless of where we are in our trading journey. Take care. Bye-bye.